Hey, what's going on, guys? Happy Friday. Welcome to week 28 of our portfolio review, where we go over our buys and sells as well as the gains and losses on portfolio. So without further ado, let's get right into the video. Before we show off the results of the portfolio this week, what I like to do is I like to give a special thank you to each one of you guys who checked out the video that I uploaded on Wednesday. I can't thank you guys enough for the support that you guys gave me, and it really means a lot to me. So once again, thank you. Moving on, as you guys can see, I was up $28.46, and I gained an additional $33.35 during after-hours trading. For the week, we were up $197.53 at a 0.5% gained. For the month, we're up $1,348.89 at 3.9%. For the last 3 months, we're up $1,009.20 at 2.8%. For the last year, we're up $9,573.32 at 36.3%. And our time, we're up $10,115.93 at 39.2%. For the buys, we were able to add 2 shares of Bank of America. 2 shares of Johnson & Johnson. I'm sorry, we did not add any shares of Bank of America. I'm so used to saying that. We added 2 shares of Johnson & Johnson, and Johnson & Johnson had a pretty rough day today, and we'll go over that in detail when we get to Johnson & Johnson. Those were all the buys and sells that we did for the week. So we're going to go into each stock individually. We will first go into Disney. Disney has some pretty nice growth this week, as last week we were up $3,743.47. This week we're up $4,041.07 for a total return of 29%. Disney will also be giving us a dividend at the end of the month for $109.12. So what we're going to do with that dividend is we're going to add that to our buying power and use that to deploy into Johnson & Johnson, as Johnson & Johnson is going through some pretty rough times. Moving on, we will look at Comcast. Comcast also had some nice growth this week, as they were up 4%. On news that Morgan Stanley has reiterated their buy rating on Comcast. They have a price target for Comcast of now $56, up from $46, I believe. They cited that Comcast will receive huge growth in these next coming 5 years, as the acquisition from Sky has resulted in great revenue, a great revenue stream. Anyway, Comcast, last week we were up $848.48 for a total return of 23%. This week we're up $1,027.36 for a total return of 28%. Comcast also has a dividend that we are looking forward to of $21.84. So we will utilize that dividend as well to create a war chest for Johnson & Johnson. Moving on, we will go over Johnson & Johnson, as Johnson & Johnson had a pretty rough week this week, as they were down 5%, and they lost $5.81 today because the Department of Justice came out and said that they are going to do a thorough investigation to figure out if Johnson & Johnson really knew if there was asbestos in their baby powder. If this news does come out and Johnson & Johnson is found to have known that was the case, which, not being biased or anything, I really do believe that they did know about it. You can't be this big of a company and not know about a report like that. If they are found to have known, I do see this stock dropping a lot more. So that's why we will have money on the side to deploy into the company, as I believe the company will bounce back and this will be a long-term hold. So it's just noise. I'm not worried about it. And as an investor, I am appreciative of being able to add to a company while it's going on, while it's fundamentally going through problems that I don't think will bankrupt the company or do anything like that. So anyhow, we are now down $15.64 in our total return. We will add a share of Johnson & Johnson each week, and if our total return is below -5% or more, we will deploy all of our buying power into Johnson & Johnson to try and fix the stock. And moving into our next stock that was another laggard this week, our healthcare stocks are performing really bad. We're performing really bad this week, as Aurora Cannabis is suffering from the cannabis sector overall, as last week CGC fired their CEO, and then there was a report that came out that CGC isn't going to be profitable until 2021. So it's really up to Aurora Cannabis based off of whatever partnership they decide to go with, and when their earnings report happens. I don't know if this is actually right, but it's saying that their earnings report, they're expected to report September 23rd. So whenever they come out with the earnings, they have to knock it out of the park for the sector. The sector will be on a decline. And the scary part about it is I was up at least $2,000 at one point on this company, and now I'm only up 11%. And the stock is coming up around my average cost. So I really have to be mindful. I'm thinking about maybe putting a stop loss around $6.50. I'm not 100% sure if that's where I want to go, as I believe their next, since they broke this support line right here at 689, I think it was 689. Their next stop is 619, and that's 5 cents. That's 5 cents above my average cost. So I will probably put a stop loss at about $6.50, and then restructure from there. It's just pretty sad that I have to exit out of this position based off of the deflation of the marijuana sector. So I will definitely this is the only company in my portfolio that I'm very worried about. So we'll just have to keep an eye on it. And like I said, a stop loss might have to be placed for $6.50. Bank of America. Bank of America has our earnings report that they will be going through on Wednesday. So I look forward to hearing from Bank of America. Also, Johnson & Johnson has a earnings report coming up on Tuesday. I forgot to tell you guys that. Bank of America, last week we were up $87.79 for a total return of 1.5%. This week we're up $120.91 for a total return of 2.25%. So, like I said, I definitely can't wait for their earnings report, and we get to see how that stock is doing. If I also had to look at another stock that I could potentially be adding to, it could potentially be Bank of America, as based off of this earnings report, the stock, anything can happen, and the stock can go below my average cost of $28.78. So also got to keep an eye on Bank of America as well. Moving on to our last stock, which is Apple. Apple has been a lagger for me for like the last year, I believe. At one point, I was up $18. I was up $2.30 on each share, and now I'm facing a negative return of 9%. But if we look into the dividends, I think I'm positive maybe $60 as far as the dividend return in the company. So what my plan to do with Apple is I am currently looking into the stock VNQ. That's the Vanguard U.S. REIT Fund. I'm currently looking into maybe selling off Apple and dumping my money into VNQ, which will also produce a dividend every 3 months, and it gives me a broader exposure to the REIT market. So I'm still fighting with that idea. If you guys have any input on how you guys feel about that, let me know in the comment section. And that's basically it for the portfolio. What we're going to do really quick is we're going to go into the subscriber portfolio. So for the subscriber portfolio, last week we were up $11.31 for a total return of 6.38%. This week we're up $13.57 for a total return of 7.25%. We also added Uber to our position. We added 1 share of Uber, and we're up 14 cents for a total return of 0.32%. Starbucks is killing it, as we're up $13.49 with a total return of 17.67%. If you guys, we still have $60 of buying power, and we will continue to add $10 to this portfolio. If you guys have any stocks that you guys are looking to add into this portfolio, just let me know, and I'll do some research and get back to you on whether I'll add it. But other than that, you guys, I know I've talked your ear off this video. I appreciate you guys sticking through the end. Look forward to my video next week where we'll go over this results from both portfolios. Other than that, you guys have a great weekend and take care.